Crypto market update. Today's market update is a day earlier. We'll go back to the regular schedule next week. Looking at Bitcoin. So after 3 weeks of consolidating sideways, the price just broke down. Right now, if we look at the fibs, the best case scenario as far as the bull trend is concerned is for this level to hold up. That's really the best case scenario. In my opinion, this is probably like as deep as this pullback can go um, before I kind of throw in a towel, at least on the bull trend, right? And just kind of treat things as a dead cat bounce. If we make it down to the lower levels at the 6K zone, there's a lot of support in at 6K. So the most bullish case scenario is this being a stop run. We'd have to see like an aggressive bounce. If it starts chopping around and doing something similar that we've seen, then the chances of a breakdown are probably higher. So this is like the absolute, in my opinion, the absolute last line in the sand. Let's say we do make it down to the 6K zone, then I basically treat this like 2018 again. Now, if it does break down to the 6K zone, hopefully it would be a fast washout. That would be the best case scenario, in my opinion. The faster to wash out, the faster to bounce, or the higher, the probability of a bounce. The worst case scenario would be, a slow grind down, a slow bleed down, and then more of this kind of this garbage chop, right? That doesn't make for very good bounce plays. So right now, my plan is to just kind of wait and see what happens. I haven't changed my Atom or Cosmos position, or haven't changed. Leo, I said I was holding longer term. Haven't changed anything with Doge, anything like that. I'm going to kind of assess on the next bounce, wherever we bounce, I'm going to assess how altcoins respond and react, how quickly they recover. If we see new highs on the recovery or a retest of highs. I've noticed that, in the last shakeout, the last dips, we've seen some fast recoveries on alts. But I'm going to kind of reassess to see if like they just produce lower highs, and if they do produce lower highs on the bounce, then I'll probably just cut, right, and do some bag cleanup and stuff. So basically, if we were to bounce at this area, so let's play out two scenarios. One scenario is a bounce at the current area. I don't necessarily know if that's like an extremely probable scenario, just on the basis that unless this was just a stop order run, right, just hunting stops, because a lot of people were kind of playing the range, scalping this range, and so clearing stops. There's probably a lot of stops below this line, so this could just be clearing stops. If it all depends on how fast this recovers. If we had like a V bottom and it could actually have a faster bounce and recovery, then that kind of looks good. But if it just kind of grinds and chops, then that doesn't look very good. It's not a really good scenario. So I'll play out two scenarios. One scenario being the event of a bounce at current levels and my game plan around that, and another scenario, bounce at 6K area. So in the event of a bounce at the current area, in my opinion, the 10K zone, nice round number, 5-digit, 10K zone would be an area to watch, right? That could be a good area for some bag cleanup, even if it bounces on the current zone. It could be a bag cleanup, reducing positions, anything like that. Or if anybody caught any dips, lock in profit on dips, stuff like that. That's, in my opinion, like the really conservative approach. I think at this point, I'm now starting to lean a little bit more conservatively just because the pullback has been so deep. So, we're kind of, in some ways, we're kind of in some uncharted territories, right? If it did recover, that would be, a first for Bitcoin to have such a deep percentage pullback and then recover. Would have to like consolidate in a much larger range. But right now it's like just producing lower highs and now lower lows, right? Also, like these are kind of sharp sell off here on this little parabola, but we've seen that before with sharp sell offs, right? So yeah, 10K at a current bounce would be, in my opinion, a good level. 2 fib levels up would be a good area to kind of assess things. Like for alts, so what I mean by assess things is like, let's say we bounce at the current area. I'll look at alts. What are alts doing? Obviously, I've kind of just been focusing on alts lately because they've made higher percentage gains on the bounce than Bitcoin. And Bitcoin is kind of boring and just chopping around for a while. So, I was focusing more on alts. So I'll give you an example. So, because that would be a 30% bounce on Bitcoin. So let's just take Atom, for example, right? Right now, this kind of looks like if this doesn't hold up, it kind of looks like a lower high, like a weaker bounce, lower high type of thing. In the event of Bitcoin bouncing to 10K, what I'd want to see is for Atom to take out the recent high, right? I'd want to see gains higher than what Bitcoin produced. So let's say, obviously if Bitcoin went up 30%, alts might go up higher on that bounce. Otherwise, if we go all the way down to 6K, then the bounce off of 6K to me is just like going long on Bitcoin, maybe some other things if there's anything degenerate, and then doing bag cleanup on current positions, except for Leo, holding that long term, Tezos long term, Zcash. I said I was going to assess at the end of the year in December. If it's not producing anything, then I'm just going to tax harvest it and see if I can buy back in the new year on that. So let's say we came all the way down to the 6K zone. I would probably, bounce at the 6K zone. I would probably take profit on every fib level, treating it like a dead cat, not necessarily knowing how high that dead cat could go, and probably completely close out again right here, 3 fib levels up, round number 10K. That's where I would completely close out the trade. So the difference between treating something like a trending market, a bull trending market, is you generally hold positions in anticipation of new highs, breakouts, breaking out the range, producing higher highs and higher lows. In a bear trend, you basically just treat every bounce like it's a dead cat, like it's going to roll over and produce a lower high until proven otherwise. If for some reason it went to 6K and decided it was just going to recover aggressively and then rally and go up higher and produce higher highs and higher lows, well, then I'd have to reassess that situation at that time, right? And just kind of, the thing with trading is like, even though one could be out of positions or whatever, or out of a trade, it doesn't mean that there's not going to be another trade setup. It doesn't mean that there's not going to be another dip or another breakout or anything like that, right? But sometimes one has to kind of, reset, hit the reset button a little bit, especially if the trend shifts, right? So I would basically, that would be like my ultimate target. It's a very conservative target. I'd be a target for Bitcoin. I'd go in fairly heavy at the 6K zone. The only thing that would kind of make me maybe reconsider that plan is if it takes like weeks of slowly grinding downwards, like kind of like the slow grind type thing. I'd rather see a fast washout. I mean, if we're going to make it to 6K, my preference would be to have it done in the next few days, right? Instead of taking weeks. If it takes weeks, then that just kind of looks like slow grind chop, and then hopefully the bounce would be quick and not just this kind of grinding sideways and then weak bounce type of scenario. But that's why I would kind of aim. First target would be like conservative. I'd likely play the leverage game as well on that. Obviously, for leverage, one has to use stop orders. So like a break down below the 6K zone would be reason to cut out of at least leverage trades. Spot trades, I've got some fiat. I'll buy some spot if we go down to that level. That's not a big deal. I don't mind drawdowns on spot, but on leverage, one doesn't have a lot of wiggle room for drawdowns, right? Couple of questions. Why do you think we can't bounce at 6,800 to 7,000? I mean, technically the market can bounce anywhere, right? The market doesn't even have to respect technical analysis. It doesn't have to respect support zones. The market can literally do whatever it wants. Like we're pretty much like trying to create order out of chaos and frame the markets with technical analysis. And when you have enough traders and people looking at the same thing, then sometimes it kind of becomes a self-fulfilling prophecy. People buying at the same level, same zones, selling at the same zones, so on and so forth. Or whales looking at those levels. Probably more importantly than the average person would be whales, would be the market movers. Positions that liquidate thousands of Bitcoin per trade type of thing, right? And we've seen a lot of crashes and rallies as a result of that kind of activity. And usually that's kind of like a catalyst. It's like throwing a snowball down a snowy mountain, and then it picks up speed and momentum as it captures new snow. So sometimes sometimes a whale just kind of is a catalyst to get the ball rolling type of thing, right? So they tend to be the market movers behind the scenes, but we don't really know who all the players are behind the scenes for the most part. So it's just we just got to base things on the price action that's in front of us and try to quantify it. But as far as like 6,800, 7,000 area, I mean, it kind of, for me, after this, at least in my opinion, maybe people can have differing opinions, but in my opinion, if this doesn't hold up, it just kind of seems like open air, right? 6K has been a major zone of support for like most of 2018, so it really wouldn't surprise me to kind of see that area tested again if we drop that low. The rest of the area just kind of seems a bit like open air to me. A breakdown from here to here, it's like a 23% drop. Rocky, would you not have orders at 7,500, which is pretty much where we're at now? We're at 7,500 at the moment. Now, initially, when we were here, I wanted to buy at 7,500, right? But the problem is it didn't make it down that low, and then it consolidated and went sideways for 3 weeks, right? So because it went sideways for 3 weeks, like we just broke down after 3 weeks of sideways. So, best case scenario, this is just a stop run, in my opinion. That's the best case scenario. The other scenario is that this is just the start of a bigger drop. So to me, it's like, if it would have maybe bounced and then wicked down in a shorter time frame, like within a week of this action right here, then 75 seemed like a really good scoop at that area. Right now, it just seems a little bit more dicey. It doesn't necessarily, I mean, one could, here's the thing. One could take a stab at any dip. One could swing the bat at any dip. The key is, I think at this point, there's two ways of managing risk on that. One is position sizing on spot and just, buying some, buy low, sell high, buying some, but then have other larger orders to average down if it goes to a lower level. And then one could adjust the risk by selling, taking some profit, selling some on the bounce, maybe keeping some on the table, kind of like a middle path, right? But I'm not as keen after like 3 weeks of sideways, this slow grind sideways. I'm just not as keen to jump into the fire in case this is a bigger breakdown, right? Now, in the event that it does bounce from here and has like a very strong bounce and recovery, then, I'm not going to complain about that, right? I mean, we'll see green across the board on a lot of things. Good chance that perhaps if that were to happen, Doge would break a new high, perhaps even Cosmos, so on and so forth. So I'll still be able to capture some profit on that. I'll reassess those at 10K. Looking at Dogecoin, going to Doge, we did break out of the 30 Satoshi zone. So it's kind of interesting because, alts have been acting bullish, but still a little bit hesitant, right? They're still a little bit on the edge based on Bitcoin correlation, right? But you can see on Dogecoin that it broke out of this lower range below 30 Satoshis and even had a throwback. And it's kind of bouncing too. It even had a throwback to kind of test, not exactly on the nose, but to kind of test prior resistance as support. So this is what I was saying, like, just because alts are still somewhat correlated to Bitcoin, and just because they just dropped as a result of Bitcoin dropping, it doesn't mean that I'm just gonna cut them immediately and kind of panic sell out of them. Now, if someone sets stops or takes profit or cuts them, then that's fine. Everyone handles positions and trades differently, so there's nothing wrong with that. Just because someone, one could just cut out to manage risk and then reassess, and if it still seems bullish or recovers, then there's always a trade for another day, right? For me, I just kind of, when I've noticed these little bounces here today, I just kind of want to see how they're going to respond. Like if Bitcoin has a bounce, like let's say Bitcoin were to recover off the current area and have a bounce to, either to the upper channel here or even to the 10K area, I want to see how alts respond, right? The most bullish case scenario on that bounce would be alts breaking a new high for a higher low, creating a higher low and higher high, right? The best case scenario would be Doge just kind of popping and going parabolic. but I think the markets they're kind of trading scared, right? So it's not like it's just going to be like an instant bull rush without lots of shakeouts and some chop and some, and if the worst case scenario is this kind of just snaps down below to 30 and this is just like a small dead cat, right? Someone else saying maybe to start a decorrelation. Alt seems to be holding for now. I mean, BAT, Doge, and HOT are holding for now. I noticed that BAT went up today. So it seemed like BAT kind of broke correlation a bit, right? Like it was like the one thing I was looking on CoinMarketCap when Bitcoin made its initial dump. And it was the one thing that was up. I think it was up like 10% or whatever. Now it kind of just cooled off a little bit, but it was up 10%. That's just kind of one market, but it's something to make note of. Honestly, I think the best thing for the crypto markets as a whole and crypto as an industry would be if altcoins could decorrelate, could break correlation from Bitcoin. We'll see. So far, that's not the case, but it all depends on how aggressive their bounces are. When they seem to be bouncing on two scenarios. They seem to be bouncing when Bitcoin goes sideways and does nothing. They seem to be bouncing when Bitcoin bounces, and it's quite obvious that they dump and bleed when Bitcoin drops. So there's still that correlation. But the reason why I say the best thing for crypto is for altcoins to decorrelate. I'm gonna kind of segue into this article one sec. I know this is kind of a news piece, but it's relevant, so I'm just gonna jump right into this piece. I saw this. This was kind of interesting. Did anybody see this article? So basically, which is kind of interesting because, at the peak of the parabola, leading up to the parabola, I wrote a market report in December. Basically, my hypothesis at the time, and this is the thing with a hypothesis, is you're just kind of trying to make sense of things, and you're trying to figure out, what the logical conclusion is of things. And my hypothesis at the time was that the launch of futures would be kind of like a sell in the news event, and would be likely be the top of that bull trend of that cycle. And I believe that in that report, I had mentioned that cash settled futures is actually not a good thing for Bitcoin. And the reason is because, Bitcoin by design was created to be, like a hard commodity. It was created to be a form of like hard money with a hard cap, right, where you couldn't inflate the supply, right? And so a lot of its market cycles have been around supply and demand, right? And it's an interesting dynamic when you have a limited supply of something where its supply emissions are deflationary every 4 years. They get reduced in half. And then you have user adoption coming in, kind of like the S-curve of technological adoption, new tech trends. It kind of creates a continuous bullish pressure, right? Where you're tapping into the growth of a technology, but limiting the resource of that technology, the unit of account of that technology, right? And so the thing with cash settled futures is it can absorb some of the demand for Bitcoin by creating fake supply that doesn't exist. And one can say, okay, well, there's always been ways to short, and there's always been futures, there's been BitMEX, there's been OKCoin, there's been, Bitfinex, and so on and so forth. BitMEX right now is by far, I think they're still currently the largest Bitcoin futures exchange, I believe. I don't know if did they put that on the bottom? I know for a long time they were pushing the highest volume. I don't see them on here. One sec. Right, so like right now, BitMEX is pushing 3 billion in volume. It's fairly significant. And that's more volume than like any other exchange. And the reason for that is because of the leverage, right? You can leverage 100x. So someone with a little bit of money could turn it into a lot of money. So that increases the volume. But the difference with BitMEX is BitMEX settles everything in Bitcoin. So it still affects the supply and demand dynamic of it, right? It's all settled in Bitcoin. So, even though a lot of that volume is inflated as a result of leverage, at the end of the day, winners acquire more Bitcoin and losers lose some Bitcoin. And it's even all the altcoins, altcoin futures are all settled in Bitcoin, right? And so, CME, CBOE futures, stuff like that, cash settled. So what that means is that they've created a market that can basically create like an infinite supply. Instead of 21 million Bitcoins, they could technically build a supply for 1 billion Bitcoins and absorb that market demand, that speculative market demand through a quote unquote regulated legacy channel, right? But it being completely cash settled, it doesn't affect the underlying supply and demand. In fact, what it does is it kind of neuters the demand a bit. It absorbs a lot of the demand. It kind of so it's interesting. So this is all a hypothesis that I was talking about, right? But I didn't have this is just like on observation, but I didn't have any facts around intent, what the other side is thinking. So when I saw this article, it definitely made me raise an eyebrow, like, interesting. So basically, what this article is saying, saying one of the untold stories of the past few years is that the CFTC, the Treasury, the SEC, and the National Economic Council director at the time, Gary Cohn, believed that the launch of Bitcoin futures would have the impact of popping the Bitcoin bubble, and it worked. So what they're basically saying is that they intentionally launched futures to pop the bubble, right? So that just kind of, that just kind of confirmed my hypothesis with some facts, because I didn't know what their intent is. I can speculate on intent, but unless it becomes known or revealed, it's just speculation, right? So I found this article quite interesting. Now, if backed volume starts increasing, those futures I think will be a good thing, because they're Bitcoin settled versus cash settled. So that could probably help balance things out a little bit. But so my whole point in talking about all of this is that if those futures actually do have an effect on suppressing the Bitcoin market, or suppressing the bull trend or bubble or whatever, then the best thing for crypto would be for alts to decorrelate, because right now all the altcoins are complete slaves to Bitcoin's price movement. So basically, if you control the Bitcoin market, you've created like a single point of failure to have access to the entire crypto markets, right? Now I'm not blaming anything. I'm not blaming Spoofy the bear whale or anything like that. The markets are the markets, right? The markets are going to do what they do. All participants are participants, including people launching cash settled futures or trying to pop the bubble, or whales or manipulators, whatever, right? They're all participants. So at the end of the day, it's just you and the markets at the end of the day, full well knowing that we don't fully know what always happens behind the scenes. So it is what it is, right? But the best thing for crypto would definitely be for altcoins to decorrelate. And it seems like the correlation is just really being locked down, especially since like 2018 bear trend, just hyper correlated, very, very sensitive to the price movements. A lot of this is algorithmic. There's a lot of algorithms that are driving that are the initiators of that will just basically automatically sell alt positions when Bitcoin dumps and automatically buy alt positions when Bitcoin starts to rise. And you can see it happen instantly. And then after that, you probably have retail that wake up, look at the chart, see things down, and then probably add to that dynamic, right? So there's definitely a lot of algorithms that are controlling correlation. But it would be nice to see independent markets trading. This is also like one of the reasons why I'm not a Bitcoin maximalist. I obviously think Bitcoin is the king of crypto and all that stuff, and it dominates the markets, and it's the oldest crypto and all that stuff, the trendsetter. But it is open source, and I do believe in free markets. So, I think that if you only had one crypto market, in my opinion, that'd be a single point of failure. I don't necessarily think Bitcoin is immune to all forms of attacks, right? I think it's survived many forms of attacks. But, if you just had that one market, let's say just only Bitcoin, then what's to stop a nation state from just, printing out a bunch of money or debt or whatever and just manufacture, like basically just control mining, right? Just take over the mining, manufacture huge industries. Now the developers could change the algorithm to combat that and render their mining operations useless. But then what's to stop nation states from just going to kick down the doors of those developers, which many of them are known, some of them are anonymous, but it would almost be foolish to think that it's completely immune from everything, right? I'm just throwing out hypothetical scenarios, but it's kind of good to assess all possibilities. But someone said, like, the Fed just printed enough money to buy the whole BTC market. Is that true? Well, they certainly, print out hundreds of billions of dollars. So like the market cap of Bitcoin is relatively small compared to the amount of money that gets printed and that's in circulation. But I don't think someone can just go and buy the entire Bitcoin market without driving the price up. Right? In order to do that, the more they buy, the higher the price is going to go. So I'd say, like, supply-wise, I dare say it's almost impossible to buy up the entire supply. Some people are just not going to sell, and then it is impossible, and then some keys are lost forever, right? But it's just going to get more and more expensive the more you buy, supply and demand. So I don't necessarily think that's a very good attack vector per se. But what could be stopping a scenario like that from happening? Well, what could be stopping that is the fact that there's like thousands of other altcoins, right? Thousands of other open source markets, that the barrier to entry for creating other cryptocurrencies are very low. They can be created anonymously. It's very hard to control. So it's like the thousand-headed hydra. So that's actually a feature. Altcoins are a feature of crypto and a feature of decentralization, right? So which is why I'm not a Bitcoin maximalist because of that, because I feel like that would be a single point of failure. That would be too easy to attack. At the end of the day, there's really no point in building mining farms to try to control the Bitcoin hashing power, because okay, let's say they control that, and then and it becomes completely once they control it, then they could perhaps try to change features or whatever. There's many other options, right? You can't control all of the markets. This is all hypothetical. I'm not saying that they're trying to control or attack anything or whatever, but it kind of gets you thinking though when they admit to launching futures to kind of quote unquote pop the bubble. That's kind of that sounds very intentional. There's like some intent there of keeping pushing the price down. Now, I personally, because Bitcoin was going parabolic, maybe it only shot up and went parabolic because of the launch of futures and the mania and the hype that was around that. And maybe if it weren't for futures, maybe it would just continue producing higher lows and chopping around and like making a kind of like a steady pace type scenario. But it was like, from here to here is when it went parabolic, basically from this depth, 55 up to 2000. And, there was a lot of weird things that were happening to Bitcoin that year. There's the whole hard fork drama. There was the, I honestly considered Bcash an attack on Bitcoin, to be honest. We've seen the Bitcoin market's dumping while Bcash was pumping simultaneously. And Bcash went to, let's see, when it went to like $5,000 or whatever the price was. I know it was at like, yeah, $4,300. So that was on, let me just see here. Let me find a better market. Need some more better market data. Right, so I think right here, okay, that was just it going parabolic. I think on this spike right here though, when it went up to 3,000, was interesting because Bitcoin was dumping simultaneously at that time. And it basically kind of trapped a lot of noobs, right? So this was on 11/11, and on 11/11, like, okay, right. Yeah, right here, 11/11, Bitcoin was dumping. So basically, if you just based it on what the markets were telling you at the time, and based on the propaganda that was being generated at the time, a lot of people, some people, not a lot of people, but some people kind of got suckered into that whole scheme where they started like FOMOing and buying, Bcash during this parabola. This is obviously getting pumped, and this is obviously getting dumped at the same time. So it was, in my opinion, there was some market manipulation there that seems too obvious in my opinion. Obviously, that's still speculation because I wasn't there watching and seeing what people are doing, but it looked like a huge pump and dump on Bcash, and Bitcoin was dumping, and the narrative was, Bcash is the real Bitcoin. It's taken over, right? And I've heard of some people like panic selling all their Bitcoin. And like you look at the price on the BTC chart, at one point during this pump, one BCH is worth 0.54 of a Bitcoin, right? So that's like 54% of the value of a Bitcoin. So Bitcoin's dumping, this is spiking up at the time, right? And I just heard of some people just getting kind of suckered into that and panic selling their Bitcoin for Bcash, and then Bitcoin bounces and then this flops, right? This is also why you gotta look at the charts and kind of think about counterforce and think about those dynamics. So, at the time, at the time in the room, I was leaning towards buying the Bitcoin bounce and shorting Bcash at the time, right? So it obviously came back down to planet Earth because, you could only, people's resources can only go so deep before the overall greater market takes over, right? Because there are other whales in play, and if you've got some Bitcoin whales who have a crap ton of Bcash, and suddenly they see, wow, I can increase my entire Bitcoin stash by 54% just by dumping. So naturally, comes back down to earth as a result of other market participants. Let's see, other comments. The miners would not agree to sell, rent their hardware to hack the BTC network because their investment billions will be worthless after that. Andreas Antonopoulos has a video about this topic where he explains it in detail. Yeah, definitely. So as far as, that's one of the beautiful things with Bitcoin is it has like those free market checks and balances, right? It's like self-regulated money, which is amazing that 10 years later, it's still, this experiment still running strong, right? As a result of those checks and balances and people's self-interest. But in the scenario I was talking about, the miners would be like, let's say, a hostile entity that had was able to print money, and could be anybody, right? Let's say China decides to just print money and build a bunch of ASIC miners and their own manufacturers and super chips, and just take over the network just to try to attack it, right? Now, to mitigate around that, though, what would likely happen is the community would come together, and the developers would likely change the algorithm. And then they would just lose a bunch of money on obsolete hardware or whatever, right? So, but, those are various different scenarios. Another comment, does the low volume on Tezos concern you? Also, do you think that the low volume is characteristic of delegated proof of stake networks, lots of people staking, not trading? Yeah, definitely. I've heard stats that they're like 80% of Tezos is staking right now. Let's see. So that could certainly have a play and an effect on that as well. The volume's not terrible. It's not as high as we talked about this a little bit last week. It's not as high as some other markets. But there's a lot of other markets that also have a lot of fake volume based on wash trading. So it's difficult to kind of determine, what's real volume and what's not, because you can basically pay for wash trading services. There are companies out there that'll do quote unquote market making and just kind of pump volume stats up, right? Now, obviously, more established coins like Bitcoin, obviously there's still wash trading happening. I think some exchanges just to boost their own stats will do some wash trading stuff. But I think, for more established coins, a lot of the volume is probably legit. So, Cosmos, I guess, is new, and it seems to have a lot of volume right now. Although, seems like most of that, though, is coming from one exchange. Good chunk of that. So one would have to kind of investigate that individual exchange. And one way that I kind of assess whether or not I think that the volume is real or not on an exchange is I'll look at the liquidity of the order book. So I'll go to the exchange and I'll look at the order book. And if I see an exchange pushing like crazy volume, but you look at the order book and it's a liquid and thin, and I think to myself, okay, like let's say I wanted to, liquidate $100,000 of an altcoin or buy 100,000 market order, right? Is there liquidity for that on the books, or would there be a ton of slippage, right? And I don't think 100,000 is really a crazy amount either. Like some people would be pushing orders a lot higher than that, right? So if there'd be a ton of slippage based on what you can see on the order book, then there's a high probability that a lot of the volume is fake, right? Whereas if you see a lot of good liquidity on the order books and high volume, then you know that, because to me they kind of go hand in hand, right? Like how could an exchange be claiming to have hundreds of millions of volume or whatever if you'd have slippage on a modest size market order, right? So that's one way I would assess it based on individual markets and such. All right, back to the technicals. I mean, the current Bitcoin market is very, very oversold right now. It's the most oversold it's been in a long time. So this is kind of line in the sand, but just to reiterate, 10K bounce from here. I'm gonna reassess things, see what the alts are doing. Probably like take some profit off of stuff. And then if we went down to 6K, then I'm basically going to basically all the cash that I have left sitting on the exchange will all go into Bitcoin and maybe something else. There's some degenerate dips. And then I'm just going to be very conservative on the bounce plays. I'm not going to treat the bounce play like I'm going to trend ride for a breakout or all-time high. And even if you did have a breakout or an all-time high, the chance of it V-bottoming from 6K and then breaking the all-time high, in my opinion, is very slim, right? You'd have a lot of chop and consolidation, so there'd probably be many other dips that one could buy and so on and so forth. So that to me would just be more of the cautious play, right? And that's the thing, right? When you're on the bleeding edge of a market, you just don't know, right? You just don't know until things play out, and then you have to kind of adjust as you go along, right? It's like balancing on a surfboard in the waves, right? You got to stay balanced and try not to fall off the surfboard, basically, right? So obviously, like a drop to 6K, for me to treat that as if the bull trend were still intact, I mean, it could certainly recover. So just because I say that I would treat it like a dead cat and treat it like an extension of the bear trend, or like this whole thing like a bull trap type of scenario, that just means that I'm being cautious, right? It means that I've shifted gears back into being cautious, right? Whereas, before that, when there was a possibility of this being, a higher low and some consolidation and the first phase of a new cycle, well, you don't know that it's not that until it breaks down, right? Until it breaks down. And so when it does break down, if the market does break down, that's when one has to kind of shift gears a little bit and re-strategize a little bit, right? Just adapt to the markets, right? That's key. Just adapt to the markets. And my way of always adapting is I just buy dips. But, the difference is how long do you hold the dips, right? Obviously, being conservative on all of these bounces is a good thing. So, buying a dip down here and just holding it like, yeah, I'm going to hold it for all-time high. Well, yeah, all-time high can happen, sure. But you know, that wouldn't, for me, that wouldn't really be adapting to the markets, right? So I would anticipate how I would treat it would be that it would just pop, let's say it bounces to 10K and produces a lower high. That's how I would treat that. I would just treat it as if it's going to produce a lower high and just expect that's going to do a lower high. And if it doesn't, and it recovers completely, then great. I'm not going to complain about that, right? There's always a trade for another day, and that's what long-term holdings are for, and so on and so forth, right? So looking at other markets, I'm just going to look at BAT here for a second. I guess BAT's picking up a bit of steam here. For whatever reason, you can kind of see that. Even Link was recovering nicely too. Kind of see that it broke out of this range. Maybe it'll have like a little throwback here or whatnot. But thus far, it seems like it could continue trending. So we'll see. I like to see altcoin markets doing their own thing, even if it's just a few of them, right? That could be like a trickle effect, you know, it has to start somewhere, right? But if we can continue to see some alts just do their own thing, regardless of Bitcoin, like I said, that's not only a good sign for an alt season, but also just healthier for the overall crypto markets as a whole, because a lot of times it really feels like for pretty much, you know, all of 2018 and 19, pretty much just feels like I've been trading one market, basically been trading Bitcoin. You know, and you buy alts because they could have larger percentage gains or larger percentage drops. So you kind of can squeeze out more profit a lot of times by buying alts on dips instead of Bitcoin. But because of the hypercorrelation, it all just kind of feels like one market. You know, it's like just watching what Bitcoin does. If Bitcoin craps the bed, alts crap the bed, right? Like, be nice to just be able to focus on individual markets instead of treating the whole thing like it's like a basket, you know, some fund or something, a basket of currencies that are all correlated. Look at Link. Wow. The heck just happened here? This is interesting. Isn't this interesting? So, you know, it had a shakeout and a dump as a result of this Bitcoin crash. The bounce is very aggressive, because if you look at it on the BTC charts, you know, it's like it's wanting to break out here. There's a bit of a triangle pattern. It kind of looks like it wants to break the all-time high. You know, and a few weeks ago, when I saw this, it kind of looked like it was just going to pop a lower high, right? It looked like sellers are stepping in, like a V-top. But there's some follow through here on Link, right? So presently, it looks like it wants to just kind of break the all-time high, and it seems to be driven right now. The markets, what's interesting is it seems to be Link was Palm Beach's Confidential's #1 altcoin pick. Do you know when they sent out that report? Just curious. The buying, that was 3 months ago. Interesting. Okay. So it looks like I doubt this entire move is just them. right? They could have started it, but it looks, so far it looks more than just like a one-off pump and dump type scenario. Like we've seen some of the Palm Beach recommendations just kind of turn into like quick pump and dump type scenarios where it would spike up and then crash. But it seems like there's, there was definitely a crash, but it seems like there's some follow through on this, which is interesting. So thus far, it looks like things like BAT and Link are trending right now, right? I'm gonna go back and look at Atom. It's had a little bounce. Doesn't quite seem to be trending like the other two, right? This could very well turn into a lower high, right? If we got Bitcoin bounce, I'll reassess to see if it could take out this high. And if it can, I'll probably lock some profit on it, a little bit of profit on it. And if it can't, then I'll likely just close the position. Let's look at Holochain. Drop on the USD charts, stable on the BTC charts. If it pops up on the BTC charts, and this will probably just be a higher low, we could see a bounce. Where I start to get interested in selling is when you get these massive spikes. So this kind of just feels a little too early. Like this could just be starting type of scenario. But if we start getting some massive spikes, I'll probably sell some more, take some more off the table. Preferably, I'd wait till January to minimize my taxes for 2019, but sometimes you gotta sell when you gotta sell. So I'm going to just keep my eyes on alts. If Bitcoin has a little bounce or whatever it does, I'm just going to keep my eyes on how they behave, because we have seen some fast recoveries on stuff on previous little dips on Bitcoin, where there'd be a big sell-off and then like a V bottom and a break of the highs. Other news. Let me see. I posted something in the room. Let's see, where is that link? So one thing I didn't realize when I was at the conference in New York is I didn't realize is that they were setting up the Z-Stark ritual, right? There's like that trusted setup type scenario. So I had many participants coming from different communities to kind of set up the initial phase of the Z-Starks. And what I like about where they're going with this is they're not going to have it as a default. So it's not like Tezos, like Zcash will be a quote unquote privacy coin by default. What it allow is for people to create privacy smart contracts that they can funnel their Tezos through. and then have zero proofs in the contract. And so it's good about that as a basically like as a dual system, not having it by default, is that that won't necessarily make it a risk for regulators, right? If regulators crack down on privacy coins, that was like one of the major concerns a lot of people had. It won't be a quote unquote privacy coin at the base layer. It'll be optional, and having it optional is actually a good thing because obviously if a financial institution or something were to want to build a smart contract or do something like that, they would want some privacy, right? You wouldn't necessarily want everyone's accounts showing to everyone in the public. So having some privacy is a good thing, just like you don't have your bank account displayed to the public type of thing, right? So having that as an option is definitely a step in the right direction. It means that more stuff can happen. So I think that's the next protocol upgrade are the Z-Starks, zero proofs. Other than that, as far as news, so there was the CFTC thing or the futures, some stuff on Tezos coming up. Don't recall anything else major as far as news is concerned. So I've stacked some orders down at 6100 area, by the way, just in case, like, you know, it dumps in the middle of the night or whatever. I don't have to set alarms or wake up, so I could get some fills and not have to think about it. And if it doesn't go down that low, then great, not a big deal. Then we pretty much just end up back at square one where we were last week, which isn't the end of the world to me. So we'll leave it at that for now. I think Chris is back next week, so you'll be able to hear. He's back from his trip from Bali, so you'll be able to hear his perspectives. Sometimes it's good to just have another perspective on stuff. Sometimes we have similar perspectives, and sometimes treat things a little bit differently or think about things a bit differently. So you'll be able to hear his thoughts on the current market situation and stuff like that. All right, folks, that's it for now. I'll process and have this sent out ASAP. And have a great weekend, folks. Cheers.